Welcome back, traders. In this video, you'll come to know exactly what you need to know about Forex trading. You'll come across what is Forex, how you can start, and many more, without any bullshit knowledge so that you can start with Forex trading and level up yourself. Let us start with what is Forex. The word Forex itself stands for foreign exchange. So Forex trading simply means we exchange one currency in return of another currency of same value. Why you should do Forex trading? What are its advantages or benefits? Forex trading has the highest volume. Within all financial markets, Forex has the highest volume of about 6.6 trillions in a day. Did you know? Forex, or FX, is the largest financial market in the world. Second, what is traded in Forex? You might be wondering what is traded in Forex. So basically in Forex we trade currency pairs. We buy or sell a currency in exchange of another currency or member-only currency. In Forex trading, we can't just buy one currency, we always need another currency to exchange our base currency with it. Let's understand it with an example. You can't only buy Japanese yen itself, but you can buy Japanese yen in exchange of US dollar. What is currency pair? A currency pair is a quotation of two different currencies with the value of one currency quoted against the value of another currency. Let's understand with Euro-USD pair. The first currency in the pair is known as the base currency, and the second is called the quote currency. What is base currency? The base currency is the first currency. The currency quote shows how much the base currency is worth in front of second or quote currency. For example, if current Euro-USD rate is 1.038, that means 1 euro is worth 1.038 US dollar. Unlike other stock exchanges, the Forex market has neither a physical location nor a central exchange. The entire market is run electronically, with a network of banks, continuously over 24-hour period. The market is open 5 days from Monday to Friday, and is closed for 2 days Saturday and Sunday. Now let's see currencies which are traded most. First, USD US dollar. Second, EUR Euro. Third, JPY Japanese yen. Fourth, GBP British pound sterling. Fifth, AUD Australian dollar. Sixth, CAD Canadian dollar. Seventh, CHF Swiss franc. Now, let's understand why USD is traded the most and why it's so popular. First, the United States economy is the largest economy in the world. Second, the US dollar is the reserve currency of the world. Third, the United States has the most liquid financial market in world. Fourth, the United States has a stable political system. Now our next topic is how to read Forex quotes. Currencies are always quoted in pairs, such as USD JPY or GBP USD. The reason they are quoted in pairs is because, in every foreign exchange transaction, you are simultaneously buying one currency and selling another. Here is an example of foreign exchange rate for a British pound sterling versus US dollar. Suppose GBP USD is currently 1.038. This means the first listed currency to the left of the slash is known as the base currency, in this example British pound, while the second one on the right is quote currency, in this example, US dollar. When buying, the exchange rate tells you how much you have to pay in units of the quote currency. To buy 1 unit of base currency in this example above, you have to pay 1.038 USD to buy 1 GBP. When selling, the exchange rate tells you how much quote currency you'll receive. For selling 1 unit of base currency in this example above, you will get $1.038 when you sell 1 GBP. Let's say you want to buy EU or USD. This simply means you are buying the base currency, which is euro, and selling the quote currency, which is US dollar. In more simpler words, buy euro and sell US dollar. I hope the concept of pair reading is clear to you all. Now let's talk about some key terms, such as long, short, bullish, or bearish. You've heard sometimes traders say that they've gone long or short. These are very simple terms. When you say you're going long, that means you're buying. And when you say you're going short, it means you are selling. In more simpler terms, long equals buy, short equals sell. Now let's understand bullish and bearish. If you say bullish, it means that you believe that the price will go up. You're bullish on that stock or currency pair. Now, if you say bearish, it means that you believe that price will go down of the corresponding stock or currency pair. Now let's start understanding the most confusing terms for most people: the bid, ask, and spread. All the Forex quotes are quoted with two prices. First is the bid, and the second is ask price. The bid price is usually lower than the ask price. The bid price is the price at which the broker is willing to buy the base currency in exchange of the quote currency. This means that the bid price is the best available price at which you, the trader, will sell to the market. If you sell something, the broker will buy it from you at the bid price. Now, the ask price is the best available price at which you will buy from the market. That means the ask is the price at which your broker will sell the base currency in exchange of quote currency. If you want to buy something, the broker will sell it to you at the ask price. I hope the concept of bid price and ask price is clear to you all. Now let's move on to another topic: spread. The difference between bid price and ask price is known as the spread. Let's take an example. You can see EU or USD quote above, in which the bid price is 1.05407 and the ask price is 1.05421. If you want to sell EUR, you'll click sell, and you'll sell the euros at 1.05407. And if you want to buy EUR, you'll click buy, and you'll buy the euros at 1.05421. Now let's understand, what is a pip? The unit of measurement to calculate the change in value is known as a pip. Let's take a EUR/USD example. If EUR/USD moves from 1.0878 to 1.0879, here you can see a 1 unit change in the last digit of quote. That change is called a pip. Here it was 1 pip change. Simultaneously, if you see price going from 1.0878 to 1.0888, that is a 10 pip change. So the change in unit value is known as pip. Let's understand what is the value of pip. If I used a 1.0 lot size and made a 10 pip profit, that means in total I made a $100 profit. However, it depends on every person how much lot size they use. If they also make a 10 pip profit, but the lot size used is different, then the total profit will be different. For example, if someone made a 10 pip profit, but the lot size used is 10.0, then in total, they would have made $1,000 profit. Now let's hop onto what is a lot size. The number of currency unit you buy or sell is called a lot size. There are many lot sizes like standard lot, mini lot, macro lot, and nano lot. Let's understand lot size more further. In standard lot, there are 100,000 units, and the lot size you'll select while buying a quote is 1.0. It means you'll make $10 on every pip change. In mini lot, there are 10,000 units, and the lot size you'll select while buying a quote is 0.1. It means you'll make $1 on every pip change. In micro lot, there are 1,000 units, and the lot size you'll select while buying a quote is 0.01. It means you'll make $0.1 on every pip change. In nano lot, there are 100 units, and the lot size you'll select while buying a quote is 0.001. It means you'll make $0.01 on every pip change. Same theory applies while selling also. I hope now your basics are clear. So if you want me to make a video on how to trade Forex pairs, then first like, subscribe and comment down #FantasticFanastic so that I can understand how many of you are really interested.